Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we revisit gold stocks in light of the recent run of record highs being set for the precious metal. The gold price is on a tear and is being driven higher by a number of macro factors, including unrest in the Middle East. The safe haven price driver is coming against a backdrop of strong central bank purchases of gold. China is a big buyer of physical gold as it shifts its reserves away from US dollars. Other countries continue to buy physical gold to ramp up gold reserves, including India, Turkey and Poland, according to Goldman Sachs. The gold price is also holding up in the face of continued outflows from gold ETFs, which continued in March for the 10th consecutive month, albeit at a slower pace. Goldman Sachs recently hiked its year-end gold price forecast to $2,700 per ounce from $2,300, saying the metal's bull market is not being driven by the usual macro factors. Meanwhile, Citi recently lifted its 6 to 12 month topside levels towards its bull case scenario of $3,000 an ounce. It says rather than a demand for duration or a weakening US dollar driving the record run for gold, a potent combination of alternative fiat demand, geopolitical hedges, macro overlays on equity and credit portfolios, and financial buying catching up to robust physical demand are working in sync to push bullion higher. Well, of course, investors and traders need companies which can make hay while the sun shines when it comes to the gold price. Evolution is a top preference for Morgan Stanley, and Todd Warren from Tribeca told AusBiz they also like the stock due to its exposure to not only gold, but also copper. Despite a significant underperformance in Australia-listed gold stocks in comparison to the price over the past 3 years, UBS, for one, says in this price environment, there are very few bad gold stocks to hold. Northern Star recently updated the market, saying it remains on track to deliver its full year 24 guidance of 1,600 to 1,750,000 ounces of gold sold. Jefferies has listed its price target on Gold Road Resources to $2.20 from $2.15, stating it's its preferred pick among junior Aussie gold miners. And Collins Street Asset Management sees significant value in the small to mid-cap gold sector at the moment, liking Barton Gold as cheap at current levels. As for the bigger name stocks, Newmont Mining, an American company, is the world's largest gold mining corporation. It's listed in Australia as well, with the current recommendation for the stock, according to analysts surveyed by Refinitiv, a buy with a price target of $13.41, suggesting a 13% upside from current levels. And that is your IG Macro Intelligence for this week. We'll see you next week.